Hello everyone, thank you for joining this Your Overseas Home webinar. My name is Roseanne Bradley, I'm a senior copywriter at Your Overseas Home. Today we'll be chatting with Jean-Pierre Çarçabal from Chase Buchanan about your financial considerations that you should think about when moving to France. It's great to see so many of you with us today, whether you're watching live or on demand. So before you start your presentation, Jean-Pierre, please can you introduce yourself and tell us what Chase Buchanan does?
Of course. So my name is Jean-Pierre Çarçabal. I am a dual national. I was born in the UK from a British mother and my father's French. I had a career in the offshore business for many years, dealing with cross-border financial planning, dealing with expats, mainly British expatriates. Then I came back to France and worked for Barclays PLC in the Southwest as the head of the private banking department. And now I work for Chase in charge of the French office, running the French office, because a lot of British or other nationals like coming to France and enjoy the sunshine. I have to say to those who are listening, it's actually 33, 34 degrees today, so it's more than sunshine. Chase Buchanan is an independent advisory firm. We pride ourselves giving a journey and an agenda to people who want to move over from a country to France, mainly from the UK to France. We take them on a journey, long-term journey, because moving from the UK to France or from other countries to France can be a difficult journey with some hurdles because the tax systems are different. And my job is to assist in making sure we don't make our clients make any mistakes. So to that extent, I have prepared a very small presentation. If you don't mind, I'll just start with the presentation. It's just a generic tax memo, and after that I'll be open to questions.
Okay, fab. Just before we start, we will open the floor to questions at the end of Jean-Pierre's presentation. If you have any as we go along, feel free to type them in the question bar on the right. We will only be able to answer generic questions, but any personal questions will be forwarded to Jean-Pierre after the presentation. So take it away, Jean-Pierre.
Okay, so take it away. So here you go. So my name is Jean-Pierre Çarçabal. As I was just saying, I have 25 years, even more than that. I've been generous to myself. I've experienced helping expats with their financial planning. I was based 18 years overseas. And with all of that experience, I understand all the opportunities and the pitfalls that come with moving away from your home countries. And what is the main difference between the UK and France, or many countries and France? There's a misconception in the fact that non-French people think that French tax system is very complicated and that France is actually a very highly taxed country. Well, in fact, it's not true, because you do pay a bit more on your income, but you will see that you pay much less on inheritance. Plus, you have, and you can see that on this screen, you have a very, very good healthcare system, which is paid by what we call the social security on income, contribution on income. So the rate is fixed at 970%. So if you have an income of 100, so you've got 9.7, which is taken out at source, and that pays for your social security, your healthcare. So, and you can go to any hospital, any healthcare issues for free. You don't even have to pay in advance. So that is actually quite a good, one of the good features of France when you compare to the NHS or even the US, where it's all private. I mean, in the US, it's all private. If you don't have a credit card, well, they don't take care of you. The income tax sliding scale, well, as in the UK or in most countries, the income tax is a sliding scale. So you see for high earners, it goes up to 45%. So that's scale. No? So up to 10,000, you pay 0. From 10 to 22, you pay 13%. And the difference between France and I will say the UK mainly is that you are taxed not as individual. You are taxed if you are married as what we call a foyer. So that gives you some sort of rebate on that scale. So I won't go into the details. A bit complicated. Depends on the number of children you have. But in the UK, everybody files his own tax return, and the tax return is made in May, June, and you are now, since 2018 or 20, I'm not sure, you are taxed at source, like in most countries, which is good. You have, and that's where sometimes people think that France is a bit socialist, there is an exceptional tax on high incomes, which you can see, and that's quite a big 3% if you are joint on incomes between 500 and a million. These are big incomes, so there are solutions to avoid these exceptional tax on high incomes by restructuring the income and treating it as something which is not income, using wrappers and fully legal, so that you actually take money not as income but more as dividend. So it's a bit complicated, but I'll be open for questions on how to do that.
Yeah, of course.
Okay.
Did you want a question now or at the end?
It's up to you. You're the host.
I'll ask this one because it's quite relevant. So Rosemary's asked, are you taxed on pension income as well if it's already been taxed at source?
You are taxed on pension income. I'll come to that. But if you have a UK pension and you are resident, if you're UK national and you're resident in France, you're subject to income tax on your worldwide income. But there's a double tax treaty agreement between France and the UK. So pension income from the UK is treated as income in France.
Okay, thank you.
Simple as that. Sometimes it is also taxed in the UK as emergency because they try to avoid people taking monies from the pension in the UK. So sometimes can be the HMRC can be a bit naughty and tax you at exceptional rates, can be up to 40%, what they call emergency rate in the UK, and you reclaim the balance in France, but it takes about 2 years to reclaim what you should have paid. So is it clear?
Yes, that's great. Thank you. I'll let you continue.
All right. So that's one that's quite important. In France, we have real estate wealth tax. Basically, the main residence has a 30% discount, and everything else goes into that banded system. If you come from a foreign country which has a double tax treaty agreement, you have a 5-year holiday for that wealth tax. So you wouldn't be paying any of that for the first 5 years, and that gives you time to downsize your property and release equity and arrange your affairs so that you're not paying that. So 5-year holiday from the day you become resident. So to become a French resident takes about 6 months. So it's actually 5.5 years. So that's holiday on that wealth tax, which is very good. Okay, that is taxation on the income of movable properties. I've put that on because you have some people who have fancy cars and they like to bring them to France. It's very rarely implemented because, as I say, most of these movable properties are depreciating assets. Of course, if you have a Ferrari or a Cézanne or a very expensive piece of art, you can be taxed, and it's quite complicated. I'm up for questions if you are in that category. Now, pensions. I've put UK pensions received in France are taxed in the UK first. Yes and no. Okay, so what has happened since Brexit, we have seen, that's why I've put in the UK first, we have seen some people who have been taxed at the emergency rate of 40% and reclaim what they should have been paying in France, added to their income on the sliding scale that I showed you earlier. And the reclaiming what you've paid in advance is a credit debit situation. It takes 2 to 3 years to get your money back. So you got to be careful. And we at Blevins Franks have a lot of solutions to avoid being trapped in that infernal circle. Because once you're in, you can't get out.
Mm-hmm.
Okay, so when I put down here, differences are made up in France. Yes, it is, but it can take up to 2 years to get your check back. So there are very simple ways of avoiding all of that, fully legal, obviously. And I'm up for, because this is something that comes up very often. You can move your pension out of the UK. You can surrender it, and you pay very minimal tax in France if you are over age 55 for private pensions. Okay, inheritance tax, that's very important in France as opposed to the UK. We are not in the common law system. We are in a Napoleonic law, meaning civil law. What is dangerous in France is that you see the exemptions here and the allowances. The inheritance tax is very generous. It's not expensive for parents, children, grandchildren, but it can get very, very expensive. And I haven't put it in there because we see more and more people who get remarried and have children from previous relationships. And children from previous relationships don't fall into that bracket. It can be taxed up to 60, 80%, depending on the size of the estate. Again, there are ways to get around that. And we are specialists in avoiding this very, very expensive tax bill. But generally speaking, in France, the inheritance tax, when well planned, is much, much cheaper than in the UK, if it is well planned. And there are very simple tools that we can wrap the estate around to avoid paying expensive inheritance tax and to transmit your estate to the people you want to benefit from your estate.
Sure.
Okay, because typically in the UK, what happens is when the first goes, the estate goes to the spouse, then to the children. Well, in France, by law, assuming it's a couple with one child, if first goes, then it's 50-50 between the spouse and the children and the child. Sorry. Okay, so we can change that by amending the marriage, the contract of the wedding, marriage contract. In France, you have 47 plus marriage contracts. So I'm particularly specialist of changing the marriage contract to mirror the needs and wishes of what the people from other countries want. And typically what they want is go to the spouse, then to the children. Okay, so to make it clear, we can use simple tools to be more Anglo-Saxon, if you want, and avoid the forced heirship that you have in France. Okay, question around the inheritance tax, because that's a very important one.
Nothing on inheritance tax just yet.
Okay, so just bear in mind in France, I'll use the word which is not a nice one, but there's forced heirship. So you have to use companies like ours to avoid being trapped in the forced airships. There's many ways of doing it. And believe me, the French don't like paying tax. So I always say, when in France, do as the French do, you know. So tax on traditional assets portfolios outside of France or inside of France, that's very complex. Whether you have bonds, whether you have ISAs, whether you have whatever, you need to talk to me, because every class of asset in the UK taxed differently in France. Our President Macron has implemented the 30% flat tax, which is inclusive of the social charges I talked to you earlier. But you've got to be wary when you change country that you don't hold assets that are tax-friendly in the UK, for instance, but are absolutely not tax-friendly in France. Okay. And I'll finish by saying we will have to pay tax, but there's no need to leave a tip. And I'll use again my sentence, you know, when in France, do as the French do, because I can tell you they don't like paying tax. So all of the tools that we have at our disposal, and I've been doing that for many years. And what is important as a summary of all that is careful planning. And at Chase, we take you on a journey from the moment you start thinking of moving. That's when planning starts, really, and then we take you on a journey to make sure that you can be optimized and pay what you need to pay, but not more.
Okay. Fabulous. Thank you so
Back
much.
to you,
I believe we've got some time for questions, so
all right.
I will make this a little bit smaller. Here we go. As we're just talking of inheritance, we have a question. How does inheritance tax work if a property is purchased according to a contract civil?
A contrat civil or a pacte civil? A pax?
Contract civil.
Contrat civil. Well, it depends what kind of contract, because a contract is a contract. So it depends on what type of contract you have. So in the contract civil, you can nominate whoever you want in terms of percentage. So you can optimize by doing that. Yeah, that's a way of doing it.
Okay, fab. Roderick's just asking for confirmation on something. Did you say that the 30% tax is inclusive of social security contribution of 9.7?
No, it's actually inclusive of 30% flat tax is inclusive of the social contribution and another contribution, which is 7.2. So it's 18 point. So capital gain itself is, let me do my math, is 17.2, and the rest is made up of social charges. So 9.2, what we saw earlier, plus another tax, which is called CSG, RDS, all of that. It all makes up to 17.2. So flat tax is inclusive of social contributions.
Okay, fab. I will just say, if you have like a specific tax question to your situation, don't worry, we can forward your question to Jean-Pierre and the team. Then you'll get a more succinct answer that not everyone will hear.
Yes.
Okay, let's have a look. Are Chase Buchanan familiar with moving from the US system to France as well?
Yes. A very good point. We have an American guy called Alex, who is specialist with dealing with. We have a license in the US, and we have a guy. It's not me, Alex, who is a specialist in dealing with American citizens, because it's all something I'm not really familiar with, but he is, because he's American and he's very good. So if any queries relate to American citizens, I'll just forward them to Alex.
Fabulous, thank you. Okay, do you recommend that clients use an attorney alongside your firm?
No, because in France the attorney has completely different signification and role than in the UK. What we do recommend is to have a good notaire.
Mm-hmm.
Okay, so we have links with the English-speaking accountants, English-speaking notaires, English-speaking attorneys or solicitors, but it's very, very rare that you need the solicitor. For wills and all of that, it's all done by the notaires.
Okay. Janice is asking, did you say that if you're a married couple, you only pay tax on the rate listed? If you're single, you pay the same percentage. Is that right?
Say again?
If you're a married couple, you only pay the tax rate listed. And if you're a single, you pay the same percentage.
You pay more if you're single.
Pay more if you're single.
Yeah.
So would you pay that, if you're a married couple, would you pay that percentage as a dual?
Yes.
Right.
Yes.
Okay.
Yes.
I think
And depends if you have children as well, and it's not divided by two if you're or multiplied by two. Sorry, if you're single. It's a complex. They call that the quotient. French love doing things complicated, but it's you work out a calculation, which is an equation given your income, your scale, and then you divide that by a quotient, which we calculate for you, and that gives you which scale you are at. So you don't pay twice as much when you're single, but if you're wealthy and high earner, single, no kids, you pay a lot.
Yeah. Okay.
Basically.
So, sorry, there's a lot of questions coming in.
Good.
I'm not entirely sure what this stands for, so hopefully you will. What is the process for applying for LMNP status for geek?
Okay, well, LMNP status stands for loueur meublé non professionnel. That's very, very. It's a way of optimizing the rental of property. So that's very, very straightforward. You just set up a company, whether it's a société civile or whatever, and you just go to the tax authorities, and you just declare yourself as being a LMNP, loueur meublé non professionnel, which means you're not a professional renter, or you can also do LMP, loueur meublé professionnel, which is actually you rent furnished. And the good thing about this status is you can rent for only a year. In France, rental agreements are 3, 6, 9 renewable. But if you are LMNP, so loueur meublé non professionnel, and when you talk about that status, it's not fully furnished. You just have to put the basics, meaning a bed, sofa,
bathroom, running water,
Wi-Fi, and that gives you a lot of tax benefit, because you can deduct all the
expenses.
Yes.
That kind of,
Yes.
Cool.
Very flexible, and very easy to set up. Very, very easy.
So in that case, if let's say I want to move to France and I want to have a rental property. So would there be a difference between me letting out a furnished property and a non-furnished?
Well, if you rent furnished, usually people who rent furnished want more flexibility, and people who rent non-furnished want more security. So it's a balance about security and flexibility. If you want security, you just go for the standard rental agreement, which is 3 years, 6 years, 9 years. If you want more flexibility, more control, and LMNP or LMP, so professional rent letter or renter, is actually better suited for people who already have a few properties.
Okay, cool. Sorry, I feel like you can tell I'm going through the elements here. I was very bright and now the sun's gone. Okay, next question. Can you explain the tax situation if you're working for a UK-based company but a resident in France?
Okay, well, simple. You pay your income tax in France.
Okay, lovely.
Because as a French resident, you pay income tax according to you pay income tax in France on your worldwide income.
Okay,
Simple.
that makes sense. How are capital gains on a UK share portfolio taxed?
Well, the UK share portfolio would be taxed first. If you're a French resident, they'll be taxed at the 30% flat rate.
Okay.
So you're better off if you have a share portfolio in the UK and you are not yet a French resident, you're better off selling that and wrap it into some EU or French compliant solutions, which are more cost effective. And especially, I will really insist on getting rid of your ISAs because they're not tax friendly in France.
Okay. Guy is asking how much time per year can you spend in France without being exposed to tax?
3 months, and 3 months out, 3 months in, 3 months out.
Okay, that's under the 90-day rule, right?
Yes, yeah, 100. Yeah, it's you are deemed resident if you spend 6 months and 1 day.
Okay.
So but that is you need to have an Excel spreadsheet with your passport because you have to be careful. So 90 days, you go out for 90 days, come back for 90 days, but be careful not to be more than 6 months and 1 day. Then you are deemed tax resident for that year.
Okay.
But dangerous sport. Dangerous sport.
Okay. Sally's asking, is there a difference between taxation of private UK pensions and state pensions?
No.
No. Okay.
No. If you have a pension that's in payment, no. So we advise that for state pension, you keep them in the UK and you're taxed in France according to the scale rate. And if you want to surrender, if you're over age 55, if you want to surrender a SIP or a private company pension, what you only have to pay is 7.5%, which is a very good deal, plus the social charges.
Okay.
And you have a 10% exemption, which is limited to around 10,000 euros.
Okay, fabulous.
Okay.
Georgina's asking, does Chase Buchanan offer a full relocation service? So registration, transferring of pensions, power of attorney, that kind of thing?
Yes. We do the entire journey. Yes, of course, yeah.
Lovely. I will just say, if we don't get around to your question, I know there's quite a few, but they will be forwarded to Jean-Pierre.
Yeah. I mean, I have plenty of time, but...
Lovely. So Mark's asked, are you liable for any tax in France if you're not a citizen? I believe this is one.
Citizen or resident? It's two different things.
I would believe that means resident.
Okay. If you're resident, you're liable for tax on your worldwide income. If you're UK citizen and you just come to France, but you are not resident, you're taxed in the UK if you're a UK citizen. So there's no such thing as being a citizen. It's the residency that actually triggers the income tax situation.
Okay. In terms of the benefits that you said before about being a married couple versus being single when you're taxed, Jane's asked, if you have a UK marriage certificate, does that count as a contrat de mariage?
Absolutely.
It does, yep.
Absolutely.
She's asked on what terms, what type of contract mariage.
So if you come to France because in the UK you get married. So it's if you come to France with having been married in the UK, that's the first thing I would be looking at, because depending on what you want in terms of inheritance, remember there's forced heirship, and if you want your surviving spouse to get all the assets, then the children, you have to look at the marriage regime, and most of the time change it. So a marriage regime in France, you have to see it as a civil contract.
Right. Okay.
So you can put whatever you want in the contract, and it's a notaire that does that, and the fee usually is not more than 3,000 euros. But that is normally 3,000 euros well spent, because it avoids you a whole lot of troubles down the line. And again, just to finish on that, I personally have full expertise on marriage regime. I know them all by heart.
Okay. Does that also apply to civil partnerships?
Yes.
Mm-hmm.
Yes.
Yeah.
Yes. Yes.
Okay.
Yes.
Yes. We've probably got time for one more question. Let me have a look. From a tax perspective, Janice is asking, is it more beneficial to own a home or to rent a home in France?
I can't answer that. Really depends on the overall estate goals, strategy. Sorry. The question again was, from a tax perspective, is it better to own or to rent? There's no answer to that one. It's really down to what Janice really wants. She wants to, and again, it depends on her income. If she wants to buy a house through a mortgage rather than paying a rent, I mean, that's again, reach out to me and we can discuss it on a personal basis, because there's no real pros and cons.
Okay, great. Okay, I think that's about. Is French unfurnished property? Karen's asking, is French unfurnished rental property only taxed in France, or is it UK as well if you're a UK resident?
If you're a UK resident, French rental will be taxed in the UK.
Okay, no problem.
Because there's a double tax treaty agreement which remains in place, which has been signed in 1971. And you won't pay tax twice. So you'll pay if you're in the UK, you'll be taxed in the UK. But you can also ask to be taxed in France if you prefer, whatever is more favorable for you.
Okay, no problem. Okay, I think that's about all we've got time for today. Thank you so much, Jean-Pierre, for all your insightful tips and advice. To everyone listening, we strongly recommend you get in touch with Jean-Pierre and the team at Chase Buchanan directly to discuss your requirements in detail, and we'll be in touch with their details shortly, or you can take his email from the slide just there. So yeah, thank you so much, Jean-Pierre. You've been really great. Before we finish, I would like to invite you to leave us a review on Trustpilot if you find this webinar helpful. Thanks again so much, and happy property hunting.
Yeah, and thank you, Roseanne, for having hosted that, and thank you for all the people who were on the call. I tried my best. It's not easy when you don't actually physically see the people.
Yeah, I know.
Don't hesitate to reach out for me. I'll try to be more precise and accurate, and we have the knowledge.
Yes, definitely. Okay, have a great afternoon. Goodbye.
Bye for now.